Bit of a strange thing going on here with Ford. I mean, what is happening that they need a $4 billion line of credit? Hello, my friends. Welcome to the channel. Great to see you. Thank you for tuning in. I'm Sam Evans. I'm the Electric Viking. Great to have you. Ford, you guys know, they do have a lot of debt. A lot of Ford's debt, which is pretty considerable, but a lot of the debt is actually good debt. It's financial debt. They lend money. They lend a lot of money. In fact, I believe on their balance sheet, they've got about $45 billion in loans. That's a huge amount of money. Right at the moment as well, there is more people defaulting on their loans than there has been for more than 10 years since the last financial crisis. In fact, that was the last time when we had this many people defaulting. So why are so many people defaulting on their loans in the United States? And there is a lot. The reason is because they're underwater on them. Their loans are worth more than the value of the car. So it just doesn't make sense to keep the car. However, what this means, it is a little bit of a risk to Ford. Now, lending money is good. Being a bank is a good thing. I mean, it's better than, say, for example, Toyota. Almost all of Toyota's debt is bad debt. People don't realize this. They compare Ford's debt, Toyota's debt. They say, well, Ford's got a lot of debt. Toyota's got even more. But, you know, I mean, the comparison is, you know, probably in Toyota's favor because they're a bigger company. But actually, no. Toyota's debt is almost all bad debt. Ford's debt, not so bad, but it could be bad if a lot of people forfeit on their loans. Now, this could be the reason potentially why Ford is expanding its line of credit to $4 billion in order to, what they said, weather market uncertainties. And maybe this has got something to do with the fact that Ford is losing so much money on every quarter on electric cars. What was it last quarter? $3 billion loss or something along those lines. This revolving credit agreement, anytime I hear the words revolving credit, I get very concerned. But anyway, that's what it's called. Revolving credit agreement adds to the $47 billion in total liquidity that Ford had at the end of the second quarter. But it is burning cash pretty quickly because it's building factories. It's retrofitting its factories as well. I mean, there was an article just before. The US has moved ahead with a $12 billion plan to retrofit auto plants for EVs. Part of the funding is coming from the US government, but a lot of it's coming from Ford as well. So what this has meant is in order to fund some of this, I don't know if I'd call it expansion, but pivot, change in its business, Ford has had to borrow money. And it borrowed around $9 billion from the US government about just under a year ago. I think it's about 6 months ago. However, they've now obtained a $4 billion line of credit to help them manage through uncertainties in the market, according to a filing with the Securities and Exchange Commission. The revolving credit agreement, which was filed on the 17th of August and posted on the 22nd of August, adds to the $47 billion in total liquidity the automaker had at the end of the second quarter, including $30 billion in cash. So they do have a lot of cash, but remember, you've got a lot of debt. Then a lot of that cash goes to paying off your debt. This facility gives us additional working capital flexibility on top of our already strong liquidity position to manage through a variety of uncertainties in the present environment, said Ford spokesman T.R. Reid. Especially over the last several years, we've been deliberate in maintaining a strong cash and total liquidity position so we can run the business as it is today and invest in the business that we envision. Ford in July warned, it put out a pretty significant warning, in fact, of what it calls economic headwinds, including inflation, higher industry-wide incentives, electric vehicle pricing pressure. Ford has admitted it's been losing on average this year $25,000 on every EV it has sold. Of course, a lot of those are the F-150 Lightning. That's a big part of the reason. Anyhow, it also said it warned of increased warranty expenses and the potential of the UAW contract negotiations to raise labor costs. Now, Ford has just agreed to a significant pay rise for its union UAW employee. That's going to add to Ford's costs. Now, the other issue that Ford has is warranty expenses. Ford pays out more money per car on warranty recalls issues than any other company in the world, and it's not actually close. Ford, in fact, have won this race, if you can call it that. They've won this award every year now for the last 10 years, except for when Volkswagen won it. Volkswagen Group, the entire conglomerate, They won it after the diesel scandal. That cost them billions of dollars, and so they took the title from Ford then. But other than that event, Ford has won this every year. And Jim Farley has made a point of this. He hates this. He hates that Ford is winning this event, having so many warranty issues. They're trying hard to fix it. And in fact, he's been very critical of the company, and it seems a bit exasperated about Ford's problems with warranty issues. Part of the reason they believe they need so much cash is to pay all this extra money to workers. There will be a significant cost there. Of course, to build out these EV factories, to retrofit their existing factories, to cover their losses on all the EVs they sell, pay interest on their current loans, and also to cover warranty expenses. There's a lot of cash drain on Ford right now. You can see sort of why. They're borrowing money. Even though they have $30 billion in cash, a lot of money, you can see why they're having to get this line of credit. And it's not cheap to get a line of credit. It's not like it's some sort of great deal. It's not like some bank came along and said, hey, Ford, we're going to give you a great line of credit, 2%. Generally, a line of credit like this is going to cost you 7 or 8% interest. It's a pretty high number. Ford, General Motors, and Stellantis are 2 weeks from a contract deadline with the UAW and could face a strike if the sides can't reach an agreement. In fact, the UAW has approved a strike. The Anderson Economic Group projected that a 10-day strike against the Detroit Three would result in $5 billion in economic losses. Ford continues to invest heavily into EVs, which is a good thing, and into new technologies, with plans to spend more than $50 billion on EVs between basically pretty much now and 2026. So that $30 billion will disappear pretty quickly. Ford's EVs are currently very, very unprofitable. That's normal though. You can't really say Ford's on their own there. Though the company expects to generate 8% margins in 2026. The key way they plan on doing that though is by using lithium iron phosphate batteries. Now the way they're going to do that is by building their own factory in North America that will make lithium iron phosphate batteries, licensing CATL's battery technology. US government though, and many politicians are angry about this. They don't want Ford to do this. They have not approved this to go forward yet, which is, I don't know, I mean, in my opinion, not a great decision considering Goshon High-Tech, which is also a Chinese battery company, is about to build 2 battery factories in the US. I think Ford needs this factory to make that 8% margin on EVs. Without it, they can't do it. But anyway, despite these challenges, Ford in July raised its full year guidance and now expects adjusted earnings before interest and taxes of $11 billion to $12 billion, which wouldn't be such a bad number. But I'm still curious, if that is the case, why does Ford need a $4 billion revolving line of credit? Just seems a bit unusual. Let me know your thoughts in the comments. Thank you for watching. Bye-bye.